Good morning, mortgage fans. So, with the weather being so amazing, I thought I'd take the opportunity to do this outside again. And I imagine everyone's had a similar sort of weekend of either barbecues, dashing to the coast, or getting sunburnt, or probably all of those things. In fact, even England are getting involved by winning their first ever group game ever. So, couldn't get much better start to the summer, really, if we tried. Back into the mortgage world, though, and probably a bit of a crash back to reality. It's the same sort of theme I've been talking about for a while now. It is still very difficult to get mortgage deals through at the minute. There's just no two ways around that. Does seem to be a new game we're having to contend with, which is where banks will now very quickly decline applications, even just for the most minor issues. It's a bit of a bullshit game, if I'm being very blunt, because it gets stuff out of their pipeline, so it looks like they're processing things quicker than they actually are. And it just creates a lot of anxiety, because if you're applying for a mortgage, it gets declined, you'd rightly worry. From our perspective, look, there's no major issue. We just explain it, we resubmit the case, and we move on. It's not really a big deal, but it's just a pretty poor experience for everyone. So that's now the new game that we're playing. But the fundamental really is that everyone who's getting a mortgage should do. It's not like cases are being declined and perfectly good applicants aren't getting mortgages. It's absolutely not the case. Everyone who should get a mortgage is. That's the point I really want to stick to. But just to sort of really set expectations, it is a bit of a bumpy road at the minute. But one of the things that's a bit of a sort of contrary to that is that mortgage rates just keep getting lower. It's just unbelievable. Sort of week on week and almost year on year, I seem to be saying that mortgage rates can't get any lower, but yet they still do. So I'm going to sort of caveat it a little bit by saying they can't get much lower than where we are now. This week, a new bank's come in with a 0.95% 2-year fixed. Wasn't long ago we were sort of lauding interest rates going below 1%. There's now quite a few lenders at that level. Even at the other end of the spectrum, if you've got a 5% deposit, so where mortgages are the most expensive, I think the market leading rate, I believe, is 3.58%, which is down from nearly 4.5% a few months ago when the government introduced this new mortgage guarantee scheme. So costs are just continuing to come down. So that's this sort of massive sort of contrary we've got. And on one hand, rates are really cheap, criteria is easing, so more people can get mortgages, but just getting it through is a bit of a pig. So I mean, the conclusion of that really is you just need a good broker finding your corner. So I think now more than ever we really are adding a hell of a lot of value, not just in finding a good deal, but then also getting it through as well. So while that makes our life difficult, the whole point is make sure your life easier. That's the point. So on top of mortgage rates getting lower, there were some interesting stats coming out from RICS last week as well. So RICS are the Royal Institute of Chartered Surveyors. They do a monthly poll of all their members to go through what they think is happening with the market. A huge amount of stats come out of this one, so it's always quite useful to look at. But the really sort of big headline one, the one I want to focus on, is that now surveyors are reporting the biggest disparity between supply and demand in 7 years. So what that means is that there's just so many people looking for property now that it hasn't been that busy for 7 years, where you've got loads and loads of people wanting to buy and just not a lot of property going on. So the problem is that's just going to keep pushing prices up. Specifically as part of the pod, they did say, is this sort of fueled by the stamp duty holiday? Now, undoubtedly, some of the big gains we've seen the early part of this year is fueled by stamp duty, but they also say there's no signs of that demand levelling off. So what that means is that some people were sort of expecting house prices might come down the end of this year because you'd have this big peak for stamp duty come back down again. That's looking very unlikely. It could be that things will just sort of stay as they are, or you'll just start to see sort of modest increases. And that's something I've said for a while, because the main thing around mortgages is the ability to borrow, and more people can borrow. So even though it's a bit difficult to get an application through, the reality is lenders' credit criteria is easing. You can buy with a smaller deposit that you couldn't do recently. So all of that thing will just fuel the property market well into this year and probably next as well. So how that translates into money market rates. So interestingly, quite a big dip in 5-year money last week. It came right down to, I believe, what was it? So 0.662, which is a 0.084 reduction in 1 week. Easy for me to say. Might not sound much, but in 1 week that is quite a big movement. And what that would normally indicate is that the economy isn't going to perform as well in the future as we thought it would do over recent months. So as a sort of one-off, it could just be that expectations were a bit inflated over the last sort of few months, and we're sort of coming back to a bit more reality. I suspect it's that, but it's something that's just really got my attention and something we're going to be looking at. Because again, it goes back to that whole thing about interest rates, because if interest rates are coming down and money market rates are coming down, you could argue the scope for mortgage rates to go down further. I'm not sure that will happen, but there's certainly scope to do it. So you can't really build a picture on sort of 1 week. It's more about the trend over the last sort of 3-6 months. But that really did get my attention. So, and with the best rates then on mortgages, I did touch on the fact that the best 2-year fixed rate is at 0.95, best 2-year variable is at 0.99, and the best 5-year fixed is at 1.14. So just disgustingly cheap to borrow money at the minute. So if you need help with this or anything else, please do contact with me, one of the team, and we'd love to help.